recorder to kind of do that. Oh, okay, so we are recording. All right, so this is going to be recorded for any of our other investors and partners that can't make it. But so we'll go ahead and get started. Let me go ahead and share my screen. Just gonna do share entire screen. I know you guys are seeing all of that, which is not fun. Are you guys seeing my screen?
Yes, I can see it.
Well, okay, perfect.
There it is.
All right, perfect. All right. So let's go ahead and get started. Again, Patrick, Stephanie, thank you both for kind of joining. I do apologize. The way that my screen is set up, I can only see my slideshow right now, so I can't see you guys. So if you guys have any questions or need to just kind of interject, please just kind of say something. And then once this is kind of done and we get to the Q&A at the end, we'll open it back up. But so again, welcome to the Milestone Premier Properties first quarterly investor session for Q4 of 2025. Kind of how we're just going to kind of run it today. Again, keep it casual. What we want to do is just kind of keep you guys informed of what we're seeing and what we're feeling here in the market. But we're going to go over some company updates. We're going to give you a market overview. I'm sure that there are going to be some questions on that. Just some owner best practices, things that can really help improve not only just the relationship that we have with y'all, but just improve how we can deliver the services that we're delivering and we want to provide to you guys. And then we're going to open it up for a little Q&A, a little open discussion, and answer any questions that you guys may have. So we'll go ahead and just kind of jump right in, and we'll just quickly we'll go into the company updates. So where we kind of stand as an organization is we're sitting at over 330 doors. I believe with what we are wrapping up for the remainder of the year, we're going to get just underneath 340 doors for the end of the year. And with what's in our pipeline and what we're going to be starting the year off, it looks like by the end of Q1 of 2026, we're probably going to be somewhere probably around 385 to almost 400 doors. So as you can see, there is a lot of growth that we have here at Milestone, which is wonderful. So we're excited for the way 2026 is kind of looking for us to start the year. Right now, as we stand, our average occupancy rate is at 92%. At Milestone, our goal is always to be above 90% occupancy rate. So that's across all of our doors. We're sitting at a 92% occupancy rate. And just to give you all a little bit of context, we've got different colleagues and friends in other property management companies, not only here locally, but nationally as well. And a lot of organizations, they're sitting somewhere in the 80% occupancy rate. So not only do we have a very aggressive goal that we set for ourselves, but we're in a very good position as well, knowing that we're sitting at 92% as of today. I know this is our first quarterly session, but this year we added 5 new team members. So along with the growth that I just kind of touched upon for Milestone this year and what we're going into for 2026, we've also got 5 new team members. So we brought on Tin. She is part of the operations team. Emery, she is our field ops. So she's constantly out in the field. We brought on Lauren. I think a few of you have had some experience with Lauren. She gets to have those fun conversations about what the property kind of needs. She's our project coordinator. Shayla, if you haven't interacted with Shayla, Shayla is our newest team member, but she's phenomenal. She's at the front. She handles move-ins, move-outs. She has transitioned to take on some of the responsibilities on the ops team as well. And then myself. So I'm a new team member from the perspective of in July, I transitioned and took over as the sales manager. So I handle everything sales related. So when you are looking to buy or sell your investment properties or your personal properties, as well as I handle a lot of the consultations and helping grow the book of business with our investors and the doors that they bring on as well. But I've been with Milestone, just to give our friends that aren't here today. I've been with Milestone since day one. I was, I guess, agent number one with Brandy when she started Milestone back in 2015, and up until July, I was just my own independent. I guess I was doing my own thing as far as being a real estate agent. And then we had the conversation. We've been having the conversation for probably a year or so about what it would look like to kind of bring me on in more of a leadership capacity and kind of help with the growth and the vision of the company. And in July, I stepped in as the sales manager. So really exciting that we have those 5 team members that joined the team this year. And with our projections and what we're looking to accomplish for 26, we're probably going to add maybe 2 or 3 new faces. We're going to really see what 2026 kind of brings for us. And then a really exciting operational and technology thing is Tenant Turner to Rent Engine. So Tenant Turner was a CRM, kind of an online technology that we were using to help with the leases and a lot of your listings. And we just recently transitioned over to Rent Engine. So what's really exciting about that is Rent Engine helps provide more rental syndication. So before, Tenant Turner was kind of syndicating to 7 or 8 rental websites. Rent Engine syndicates to 20 rental specific websites. So more presence, more exposure for your listings when they're out there. But kind of a better layout and presentation for like the applicant and the experience that they have. Tenant Turner was very basic in the way that it looked and felt. Rent Engine really gives more of a premier experience and a feel. So when they're looking at their photos and they're gathering the information that they need, whether it be how many bed, how many bath, the description of the property, so on and so forth, it just gives a better feel. There are better AI tools that Rent Engine is providing. So better response time with potential applicants. So with some of the AI tools, if it is information that the AI tool, for example, can pull from the listing, it can respond in 1 or 2 minutes to the applicant, so that we are capturing when they're engaging, right? We want to capture that as quickly as we can, versus before it was all manual. So whenever the AI can't answer the question, that's when it's kind of getting pushed to Balin, and she is able to jump right in seamlessly and kind of answer those more detailed or specific questions. So that's a really, really nice feature for Rent Engine as well. And then I think you guys have started to see your owner reports, and we were really excited for that as well. But you're getting more detailed owner reporting. It's allowing you to kind of see a lot of the things that we're seeing, but it's giving you more context and insight from an analytical and a data perspective to what we're seeing for your particular listing. Not just how many showings that you're having and what some of that feedback was, but you really kind of see how many touches and how much engagement are we really getting out of those properties. So. And then Rent Engine really provides, from an AI perspective as well, it allows us to be even more aggressive and more proactive in really understanding what the market is telling us from a pricing perspective. Do we think that it's letting us know that based off of other listings, maybe the pricing is not strategic enough, right? So it's providing a lot of great tools along with days on market and all of the things that are important. It's really providing that, and it's got a great application that we can use on the go as well. So just a lot of great tools that we are implementing to continue to be as proactive as we can, and always looking for the best ways to be promoting and marketing your listings and getting them done and leased out as quickly as possible. Any kind of questions on what I've kind of touched on from a company update and a company perspective? Real quick, one thing, just to kind of tease out there for you guys. We are looking at bringing some maintenance in-house in 2026. We are very aware at some of the costs that are associated with maintenance and upkeep of the properties. So we are exploring and hoping that we will have some form of it in 2026, to where we're going to be bringing some of the property, the maintenance in-house. So we're still exploring what that looks like. We're going to keep obviously our trade specific vendor relationships intact, but a lot of the other items that we feel we can help reduce costs on, that's something that we're looking to do. So stay on, front of mind, and you'll be on the lookout for some of those updates when we can provide them on that. All right, from a market overview perspective. So currently our median days on market here for Milestone, we're sitting at 44 median days. And then again, the reason that we use median days on market, not average days on market, is it helps us eliminate some of the unrealistic or the listings that have been on the market for a very, very long time. And this gives us more of a true number of what properties that are being priced properly, marketed properly. You have owners that truly do want to get them, leased out. So we're sitting at 44 days, and the Grayson County average right now is 57 days. So we are well below what the county average is. Our goal is to be below 40, so we're just above that. And I do believe when the next batch of numbers comes out, because we had a really good week for some move-ins, that number is going to be lower. But as of today, we are sitting at 44 median days on market. Rent trends. This is a hot topic. So when we're sitting from our rent trends, we are seeing an increase in non-renewals. We are seeing a unique trend recently of folks that are just turning in their keys. We had one that didn't even give us an indication. They had moved out, they had cleaned out the property, and they just showed up and said, "Hey, I got to give you the keys. I can't afford to pay rent anymore." So we are noticing a trend of folks that are non-renewing and looking for alternatives, more on the price side of things. That is a trend. So we are seeing folks that aren't having conversations because they're looking for cheaper alternatives. So that is something that we're paying attention to and keeping mind of. We are starting to see a lot more of the applicants and the tenants. They're wanting to negotiate more than ever before. So I think y'all know this. Patrick, I've worked close with you and Naomi, and then Stephanie with Sandy. Same thing. It's a buyer's market. It's a tenant's market as well, right? Just like when it's a seller's market, it's a landlord's market. So they're negotiating more on price, on pet policies, on the terms, on, I want to make sure that the fridge is cleaned at no additional cost, or, this is done or that is done. They're being very, very particular, and they're being very, very specific of their wants and their needs, knowing that if they don't get it, somebody will give it to them. So we are starting to see and have noticed that recently that is becoming a big thing. Increased inventory and competition. You've heard this term before, accidental landlords, first timers. These are folks that are not flooding the market, I would say, but there's enough out there where a good example is we had one that just came on board. They bought a brand new build. They needed to get a bigger home for their family, but the home that they purchased that they've been in less than 3 years, they can't sell it. They wouldn't be able to recoup what they were into the home for. So the only option for them was to rent it. So we're seeing a lot of increased inventory. And again, because there are a lot of folks out there that are being very price conscious and aware of the economy and how far their dollar is stretching and what they can afford. We're seeing people that are going back home with mom and dad. They're cohabitating, so maybe they're moving in with friends to try and reduce the cost. There's a lot of factors that are adding to the increase in inventory. So that's also kind of the trend that we're seeing as well. What is Milestone doing? So we're being strategic with our pricing. you know, for Patrick and Stephanie, for you guys specifically on the call right now, I know that you guys have had those conversations, but we're being strategic with our pricing. We want to be as attractive from the very beginning as possible. We want your listing to get as many eyes and as much attention early on. I have a saying that days on market are like acid to a sales price. It's no different when you're doing a rental, right? The longer it sits, the less eyes that people put on it. So, you know, we're being strategic with those conversations. We know it's not an easy conversation to have, and we don't take it lightly. But those are things that we're doing to make sure that we are pricing ourselves based off of what we're seeing, not only overall in the market, but specifically locally to your listing and what's around your listing as well. Um, Listing refreshes. So this is something that we talk about, that we do, but we're constantly working and staying on top of the algorithms. You know, making sure that your listing stays on that page one when people are searching. So we're always refreshing it, rearranging photos, deleting it, re-adding it, you name it, whatever we need to do to keep your listing fresh. We're always being proactive on that. You know, you've probably heard this conversation more than once, but we're making recommendations on during the make readies and the turnover on updates or upgrades to the property to help make it stand out. That's another big thing that we're seeing is properties that stand out against the other ones are ones that they get the most eyes on it. So, you know, the things that are going to add that eye appeal and the ROI to your property, we're having those conversations more than we have in the past. Not that we didn't do it in the past, but we're noticing that those are the things that are really helping properties stand out. And just a stronger presence. So, you know, we've added video walkthroughs, we've added floor plans, like I mentioned, the transition to tenant from tenant turner to rent engine, so that it's syndicated across more rental specific websites, our social media, our referral partners. We're always doing everything that we can to make sure that as many eyes are on your property as possible. And I don't say this lightly, but if your property is sitting and it is sitting for a long time, at the end of the day, it is 99% probably price. So just keep that in mind. Just keep that in mind. And then as an outlook for 2026, you know, we mentioned the bringing maintenance in house. That's going to help with the overall cost. But there's a really good quote that I want to read to you guys that I saved, that came from Redfin. But you know, we are seeing rate cuts and things of that nature. But according to Redfin, early projections for 2026 is that it's going to bring a housing reset, with the median U.S. home prices expected to rise only about 1%, and then home sales should climb about 3% from 2025, because it's expected that wages will finally outpace home price growth, making it more affordable to get people into their next home. So there is positive outlook into 2026. You know, like I mentioned, it looks like the Fed is going to make a few more cuts before the end of the year. We're going to see if some of the changes that the government is doing are going to help, but that is the positive outlook that we are seeing going into 2026. So that is exciting to say the least. And let's take a look. So this is a great topic that we wanted to put out there, because people are always asking us, you know, what can we do to get our properties leased faster? What can we do to make sure that we're getting the most? So some of the best practices for some of our owners, just to keep in mind, y'all may be doing this. It's not directed at any one person, but always keep front of mind, what can we always be doing? And again, we're always open for that feedback as well. So please share with us any thoughts specific to your situation as well. Okay, guys. But the importance of first impressions. So curb appeal, professional photos, and quick turnarounds. We don't say it lightly, but photos are going to get somebody's attention. We don't want somebody to show up to a property and quote be catfished because the landscaping wasn't done, or there's overgrown weeds, anything like that. So making sure that the property is always in a presentable fashion. We're making sure that those photos look like the property, and quick turnarounds, right? We want to make sure that we're getting the information out there and getting the information to you and the responses back in time as well. Pricing realistically to minimize vacancy. It's not a fun conversation necessarily to have right now, but being very realistic about what we are sharing with you. So if a year or two ago you were getting, $1,700 or so for a property, but now we're telling you it's probably closer to 1450. Again, we don't do that lightly. It can come across as sticker shock, but we want you to have an open mind to being realistic about what pricing needs to be. I will give you a perfect example. We just had a new owner come on board, and they were very, very open and eager to join us, but they really took our recommendations positively and said, "Hey, I trust you guys. Price it where you think you need it to be. It's less than what I thought, but if this is what you're telling me, I'm going to trust you." Their property was leased in 12 hours. We didn't give the property away by any stretch, but we priced it strategically against the competition that was around it to make it the hottest, freshest property around. It got a lot of eyes, and again, leased in 12 hours. Great scenario for them. They were thrilled. They were overjoyed. They couldn't believe how quickly it happened, right? So again, being very realistic about pricing, understanding that if you're trying to squeeze maybe $150 or $200 more, and you want to kind of slowly trickle down, this isn't the market to do that. You want to be aggressive and strategic from the jump. Little price drops, it's just going to sit. If somebody didn't want the property at 1,700, they're probably not going to take it at 1,675, right? So just keep that in mind when we're having our conversations. Preventative maintenance, it saves long-term costs. I can't stress this enough. I know that we have this conversation, or a common rebuttal that we get is, shouldn't it be on the resident? And a great example of that, guys, is quarterly or even seasonal HVAC services, right? Well, shouldn't the resident be changing out the filters? Absolutely. The resident should be doing a lot of things. And if you've ever gone through a turnover and had a dispute about what's owner responsible or resident responsible or anything like that, you've probably realized that they're supposed to do a lot of things and they don't always do it. And probably your biggest and largest asset is your HVAC system. This is just an example, but doing things like signing up for regular maintenance and ensuring that the filters are being changed and that the systems are being serviced, they're going to extend the life of that asset. And our job is just to make sure that we are protecting and managing your asset to the fullest of its potential. So regular maintenance, some folks, they do pest control. They want to ensure that they don't get any kind of infestation. So they do things like that, regular lawn maintenance, right? Making sure that the lawn is in good condition the entire time versus, maybe somebody just doesn't take care of it. And by the time you take it back over, does it need an overhaul? Does it need to be seeded? Does it need a lot of work, right? So regular maintenance is something that we can't stress enough. We understand that it sometimes can be an additional cost, but again, this is protecting your asset, right? You guys may have heard me say this, but when you guys work with a money manager, you're trusting them with your finances. You're trusting that they're going to manage it properly and that they're going to help it grow for retirement or whatever you're looking to have that money do. We approach your property the same way. We want your property to be the best property that it can be, that the tenants and residents are happy, and that we're protecting it for future growth and future, equity and all of the things that go with it. So, trust us when we're coming to you guys with those recommendations. But preventative maintenance, it saves long-term costs. Don't keep putting a Band-Aid on something when you could be in front of it and be ahead of it. No different than your car, right? You change its oil because you don't want the oil to dry out and the engine to blow up or seize up or anything like that, right? You change your tires, you rotate them, all of preventative maintenance, right? And then upgrades with the best ROI, right? Lauren isn't out there recommending things lightly. We understand that So this isn't always the best time to say, well, I need to spend X amount of dollars on the property. But we're always going to be proactive, and we're going to recommend to you guys, the things that are going to help your property from an ROI perspective, from an eye appeal, from a standout from the next one. We're always going to be a proactive organization and presenting those things to you. And then finally, y'all, the biggest one is timely communication between you as the owner and us as management. Now, if we ever falter on our communication, please call us out. We want to own up to that, but we're looking for timely communication. If we're sending a repair request, we need to know ASAP that that's going to be approved, right? We're not bombarding you, but remember, for the most part, the property management agreement states that anything over $300, we're communicating that with you, and we're going to need to get approval to get it done. The other piece to it is there are times when we're going to get a request for a second quote. Please remember that we've got exclusive relationships with our vendors who are providing us exclusive pricing. And if we're coming to you with a price, we have already determined that that's the best price just due to our experience, and or we have gone and gotten a quick second quote for you. So timely communication. If we're reaching out to you, please reach back out to us, because we can't move forward without your approval in a lot of things. And just understand that if we falter as well, please call us out and let us know, like, hey, I expect you guys to get back to me. We're going to own up to that as well. So it's a two-way street, but that is going to be one of the best things that y'all can do as well. Other than that, y'all, I know I've been chatting it up for a minute, so I'm going to unshare my screen here and open it up for a little Q&A. Let's go back to the meeting and stop the screen share. So I apologize for the million me's. There we go. We'll go ahead and open it up. Patrick, Stephanie, what questions, thoughts do we have?
First off, great presentation, Greg. Thank you for that.
Thanks.
So, like asking you as the sales manager, looking at 2026, a good time to hold, good time to buy. Like, what's your thoughts on, if we're investors looking at 2026, like what should we be looking at?
I would say right now, as an investor, buying, right? Finding the right deals and finding the right opportunities to where, and I think, Patrick, we've done a couple in the final third quarter of 25 where there was built-in equity even after projected repairs, right? Did the market still kind of come down a little bit? Sure. But just always remember, and again, our investors, y'all aren't in this to not through the long game. Real estate, even though we're declining a little bit, it's gonna go back up, right? The projection is that we're still looking on a national level to appreciate around 1%. Here in North Texas, I anticipate our number to probably still be a little bit higher. There's still a lot of growth. There's still a lot of folks that still are moving here. A lot of the infrastructure work is still being done. Again, if y'all ever get the chance to come out and visit us and see this, there's constant work being done. So from that perspective, I would say if the deal makes sense, be a buyer. If you have the funds to do it, be a buyer. Patrick, I think you are in the financial services world, right?
You know it.
Okay, so same thing. If I said right now, what should I be doing with my stocks? Your response is going to be, you should be buying because they're on sale right now. It's on sale right now. Same thing. But again, it needs to be the right purchase, right? Buying, and then if you're in a situation where maybe you're not cash flowing, this may be speaking to somebody on the call or somebody that's going to be watching this recording. If you're not cash flowing right now, it doesn't necessarily make sense to sell, because what you probably purchased the property for, you're not going to get back on a retail sale right now. So if there is a way to either purchase another asset at a very good price that maybe helps offset it in the aggregate, or just biding your time until it does turn around. I would say to hold unless the situation calls for you to sell. Do we have sellers and investors that are selling? Absolutely. Everybody's situation is going to be different. But if you had to say, Greg, what would you do right now? Buy if you could, hold, and then sell. Yep. Stephanie, I think you might be on mute.
If she's not on mute, I just can't hear.
Yep. So Stephanie, yeah, we're not. Okay, you'll put it in the chat. Let me open up the chat. It's okay. It's all right. I'll open up the chat so we can see what it says. All right, I got a thumbs up. Is the chat working for you? Let's see. I got the chat open for you, so. No, nothing there. You're good? You're okay?
I'll ask
Okay.
another one.
All right.
Greg,
Sure.
just
Go ahead.
so expanding based off what you said. So single family versus multifamily right now, are we seeing differences in, like you brought up the pricing, right? And especially for our rentals kind of being at the higher end and we're had to bring it down, but there's duplexes down at the 1,200. Is that where you're seeing a little bit easier time to rent? What's your thoughts on that?
So with the multifamily and the duplexes, excuse me, we're seeing folks that are wanting to go from the duplexes into single family. So, and then also I was talking to Balin this morning, just trying to get additional trends from her, and she had mentioned a lot of folks are coming in and they're saying, well, here's my criteria, and then we'll send it, and then the immediate response is no duplexes, no duplex. I don't want duplexes, right? So there are folks that their circumstance will say I'm gonna take it, but we are seeing people that are wanting to get into single family more than probably multifamily right now. So if that was something to look at, I'd say continue with the single family. The other thing about single family, if you needed to sell, you're going to appeal to a broader audience when it comes to selling that property, not just another investor. Again, there is a place for multifamily, and we've got plenty of multifamily in our portfolio. It is probably, I'd say, stick to single family right now.
Perfect. Thanks, Greg.
Yeah, absolutely.
Can you hear me, Benny?
All right.
Oh.
Now we can hear you. I was hearing typing. So yes, Stephanie, we can hear you. We can hear you.
Oh, I was just gonna, thank you so much for this. I'm really glad Milestone's doing these meetings. This is going to be super helpful. It's nice to keep a pulse on things when you're out of state, and so we appreciate you taking the time to do this. Very much. I mean, we're definitely in that weird situation, and we're trying to decide what to do next. So we trust what you guys have been telling us, and are just for the ride, and looking forward to things coming back around and trying to take advantage of things if we can as they are, and go from there. So your team's been amazing. We're super happy with everything, and as you grow, I love to hear that you're hiring more people, because we know growing can also, you don't want to lose the attention to details factor as well. So just wanted to give my kudos, and then also let you know that I think this is a great idea with the meetings. So thank you.
Yeah, no, absolutely. It's and I appreciate you. Number one, the praise is much appreciated, but also kind of just seeing, like, we want to keep a pulse on everything, and we want to make sure that y'all know what's going on. I know that we can have individual conversations, and Stephanie, we've had conversations, right? Patrick, same thing. We've had those conversations, but we want you guys to see the whole picture, right? And we also feel when you could be around other investors, And hopefully this is going to grow to where this is going to be a room of folks, right? We had a few folks that said that they couldn't make it today, which was unfortunate, but that's just going to foster, you know, the questions and the thoughts and the conversation. And that's what really we're looking to do, is just add another dimension and layer to the relationship and the partnership, because that's what it is, right? So I'm glad that you guys appreciate that. And yeah, we're absolutely looking to keep this going on a quarterly basis, and really just kind of keep y'all informed. So that's awesome.
Awesome. Well, thank you very much.
Yeah.
Yeah.
Yeah, for the first one, I figured it was probably going to be a lot of me talking, but eventually my goal is to make this as interactive as possible. I really want what questions that you have that we can help answer and shine some light on. And, you know, if there's any subjects or topics that maybe you'd like us to cover on the next one, please, you know, I always joke about, you know, we got a suggestion box, shoot me an email, you know, say, hey, Greg, do you think you could talk about this or incorporate this into this one? I think this would be something that would be very beneficial. Absolutely. We're open to it. I'd love to hear and see that as well. So,
and then what was so valuable for me right now is that if and when, like, you know, I'm going to have some leases coming up, and I'm already thinking, okay, well, maybe I can, if they're really, you know, exiting properties and looking for that savings, I'm already trying to think creatively, what can we offer them to have the offering the lawn care service, if it's, you know, what kind of negotiation. So I'm thinking about that now and not just when the lease is up and boom. So
yeah. And that's a great spot to be in right now, is to be proactive and thinking further in advance. Because another thing that, and this is my perspective, this may not be an entire industry perspective, but these folks that are non-renewing, you know, they're making their decision, and they could be making it earlier, like, hey, we're going to get through it because we're going to honor what we said we were going to do. But if we can get to them sooner rather than later from hey, how are you feeling? You know, what are your thoughts? You've been a great tenant. We'd love to get you to stay. Where do we need to be? Like, what is that conversation? The negotiation piece of it is becoming more and more prevalent. So being front of mind, like, hey, you know, we're going to include lawn service. We're going to take that off of your bill, or, you know, we want you to stay. Why don't we lock in maybe a 2-year, and we'll definitely put down a really good incentive for you, a rate for you, all those types of things. Keep front of mind, because as long as it's a buyer's market, it's going to be a tenant market. Then they're aware and they know.
Yeah. Okay. Thank you.
Yep. Awesome. Anything else, Patrick or Stephanie? You know, we're kind of coming up on about the 40-minute mark or so. So if there isn't anything else, I'll give you guys time back in your day, and, you know, I'll really appreciate you two being able to jump on, and look forward to the next one, and obviously our continued relationship.
Yep. I'm all set. Thank you so much.
Okay,
Yep.
perfect. Awesome. Yeah, absolutely. Thanks, y'all.
All right. Have a good day. Bye.
All right. Bye. Brandy, I think you can go ahead and stop the recording.